The numbers are in, and the United States economy fell by 32.9% during the second quarter of 2020. That's the worst economic contraction that has ever been recorded. What's up, everybody? I am Jaspreet Singh from theMinorityMindset.com and welcome to The Minority Mindset. To put a 32.9% economic contraction in perspective, let's look at history. During the 2008 Great Recession, our economy was hit very hard during the fourth quarter of 2008, and during that quarter, our economy fell by 8.4%. 8.4% was horrible at the time, but it's nowhere near a 32% drop. The worst economic contraction that we have recorded data on was back in 1958 when the economy shrank by 10%. But this new economic contraction shouldn't be a huge surprise because our economy was shut down for most of the second quarter. That's April, May, and June. The big question now is, how is this economic crash going to affect you and your job, and how can you protect your money and find the opportunity in this crisis? Well, you are in the right place because that's exactly what we're going to be talking about in this video. But before we get into that, hit that thumbs up button below, because if you don't, well, the way the YouTube algorithm works, then YouTube will be less likely to show you any more of our financial education videos. This second quarter economic crash was driven by consumer spending falling off of a cliff. Here's how the economy works in a nutshell. You make money from your job, so then you go over to the mall or the store and you go spend some money. The more money you spend, the more money the business makes, and the more money that the business has, then the more money this business has to hire more employees. The more employees this business hires, the more people that have money to spend, and now you have this cycle of people spending money and the economy growing. When this 2020 pandemic started, people stopped spending money, and so this economic cycle that I just showed you stopped, and that's why the economy fell off a cliff. There are two reasons why spending stopped. First, people lost their jobs faster than we've ever seen happen in history, so people became more protective with their money and stopped spending. And second, the whole economy was pretty much shut down, so even if you wanted to buy a new Gucci scarf, you couldn't because the mall was closed. This so far is the obvious part. The economy was shut down and people lost their jobs. The bigger question now is, how badly is the economy actually hurt? Sure, our economy crashed by 30-some% in the second quarter, but that's because the economy was shut down. Now that the economy is opened back up, what's going to happen? If I go back to the business wheel I diagrammed for you earlier in this video, this whole wheel hinges on people having money to spend. Remember, the more money you spend, the more money businesses make, and the more money businesses have to hire more employees, which gives more people money to spend. You might think, oh, the economy has opened back up and people are going back to work, so things are just going to go back to normal. Except we're going to feel the pains from this economic slowdown for years into the future. We've already seen dozens of major businesses like Hertz, JCPenney, GNC, 24 Hour Fitness, Brooks Brothers, and most recently, CPK, California Pizza Kitchen, file for bankruptcy during this pandemic. These are permanent job losses and real estate vacancies and loan defaults that cannot be healed by just opening up the economy. Yelp did a study and they found that 55% of all businesses listed on their app are now permanently closed. Back in April and May, we thought that a lot of these businesses were just temporarily closed, but according to Yelp, now the majority of the businesses on their app are permanently shut down. The worst hit industry was restaurants because according to Yelp, 60% of all restaurants on Yelp are now permanently shut down and do not plan on opening back up. If we go back to the business cycle, if businesses aren't making any money, they don't have money to pay their employees, and that's exactly what we're seeing happen right now. Since mid-March, more than 1 million Americans lost their jobs and filed for unemployment every single week. The thing that I want you to keep your eye on is the trajectory or speed at which people are losing their jobs. So people were losing their jobs the fastest in April, and then it started to slow down significantly until mid-July. From April onwards, the amount of people that lost their jobs and filed for unemployment kept slowing down until mid-July, because on July 23rd, it was reported that more people lost their jobs and filed for unemployment than the week before. And then on July 30th, it was reported that more people lost their jobs and filed for unemployment than the week before that too. So people started losing jobs faster than ever in March. And then these job losses peaked in April, and then they kept coming down until mid-July. And then in the mid and end of July, these job losses started to pick up again. But there's one more variable I want to add to this. The unemployment numbers never meant anything, because if you lost your job, the government would pay you something like $1,000 a week when you add in the federal and the state unemployment benefits. So if you lost your job, it wasn't that big of a deal because you were still getting paid. Actually, you had millions of Americans making more money in unemployment than they made when they were working a job. So it really wasn't that big of a deal when people heard that millions of Americans lost their jobs. But now with talks of the unemployment program changing or even ending, it's going to become a much bigger deal when people lose their jobs. The government hasn't fully approved what the new unemployment program will look like, but I will keep you updated on our channel. So if you haven't subscribed to our YouTube channel yet, make sure you do that and hit that little notification bell too, because if you don't, then YouTube doesn't let you know when our new videos are released. So if we go back to this business cycle, if businesses don't have money coming in, then they don't have money to pay their employees. And typically, if employees or people don't have jobs, then people don't have money to spend. Now, this is where the government stepped up and they created this unemployment program, which gave people money to spend even if they didn't have a job. But if this free money goes away, that's when our economy is going to be put to the real test. If this free money goes away and people still don't have jobs, then businesses naturally won't make any money, and that's when more businesses are going to feel the pain from this recession. We are supposedly in one of the worst recessions in history, but if you go to the mall, you're going to see a line out the Gucci store because people still have money to spend. The thing that everybody has their eye on right now is how long will it take for our economy to go back to normal and run like normal without all this free extra money. And I'll be talking about that in just a second, but for you as an investor, this is where you want to be looking for opportunity. What we've seen throughout history time and time again is that over the long run, the United States economy, the stock market, and strong companies go up. Economic slowdowns provide you with the opportunity to buy great investments like shares in strong companies at a huge discount. Like Warren Buffett said, be fearful when others are greedy, and be greedy when others are fearful. When people are really worried about our economy, that's when you can come in and swoop up great investments on the stock market at a discounted price, because these discounted assets will help you build your wealth a whole lot faster than normal. Now, before you go and just throw all your money in the stock market blindly, let me make sure I remind you of this. Investing has risks. You are never guaranteed to make money when you invest. You might even lose money. So make sure you always do your own due diligence and don't just blindly listen to a random guy on YouTube. If you are interested in investing in stocks, you have to use a stock brokerage like our sponsor Webull, who is a commission-free brokerage. A commission-free brokerage means they don't charge you a penny to buy or sell a stock. It's free to open an account, and it is simple to invest with them. All you have to do is open up a free account, fund it, and then you can buy and sell stocks right off of their mobile app or on your computer. And the best part of all is that Webull is giving you, Minority Mindset fans, 2 free stocks just for investing with them when you use our link in the description below. You get your first free stock just for opening up a free account, and then you get your second free stock valued at up to $1,400 when you deposit $100 into your account. So if you want to learn more, start investing, and see how you can get your free stocks, I got the link to where you can do that in the description below. Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. I mean, it's free to open an account, and they don't charge you a penny to make a trade. So if you want to learn more, start investing, and get your free stocks, I got the link to where you can do that in the description below. At the time of me recording this video, there are more than 50 million Americans out of a job. To put that in perspective, in 2008, about 3 million Americans lost their jobs, and it took the United States years to recover from those job losses. In 2020, we have tens of millions of Americans out of a job. Now, many of these job losses are just temporary job losses, but there's still a good chunk of Americans that have permanent job losses. If we want to create more jobs, we need businesses to make more money, which means we need the economy to start functioning again. And I'm not going to be talking about the pandemic in this video, but in order for this to work, then we need the whole economy and the whole economic cycle like I talked about to start functioning again. And this is where the government and the Federal Reserve Bank are working together to try to stimulate the economy. The Federal Reserve Bank started by slashing interest rates to to make it cheaper and easier for you to go out and get a mortgage and buy a home. So that's why you've been seeing people buy homes like crazy in the middle of a recession, because they believe that if more people are buying homes, it's going to stimulate the economy. That's why the government has been talking about these historic stimulus bills to give people money. And you can't forget that the Federal Reserve Bank has pumped a lot of money into the stock market because they believe that if your stocks are higher, you are going to feel wealthier and you're going to be more likely to go out and spend money. So it's safe to say that 2020 is going to be a crazy year, and we still have a lot of craziness ahead. And to top it off, it is an election year, and Donald Trump has brought up the idea of potentially delaying the election. This is where I want you, minority mindset thinkers, to cut through the noise and look for the opportunity in this craziness, because whatever happens, I want you to know how to use the system to your advantage. It helps to be aware of what's happening in the finance and business world, and that's why we created the free Minority Mindset newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money. This newsletter is completely free, and you can subscribe to our free finance and business newsletter by clicking the link up here or by clicking the link in the description below. By the way, our financial news emails are separate from our financial education emails. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about how you can grow a small stock market portfolio into something much larger, we already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.